Today we will discuss about closed-end and open-end funds. What are closed-end funds? Closed-end funds are funds that issue a set number of shares, usually once through an initial public offering, also known as IPO for short. That number remains set until more shares are issued by the company. Since there are a set number of shares, interested investors can purchase the fund from current shareholders only, usually on a stock exchange. This process does not involve the issuing company at all. Investors who wish to buy or sell shares of a closed-end fund place an order the same way they do if they were buying or selling shares of any company on a stock exchange. Closed-end funds are not mutual funds under securities legislation and are therefore not subject to the investment restrictions applicable to mutual funds. These funds are therefore not restricted from using investment strategies like leveraging, shorting, and use of derivative products. The market price of shares of a closed-end funds on an exchange is determined by demand and supply considerations. The market price of a closed-end fund can be above, below, or equal to the net asset value per share or NAVPS. Although in most cases the market price is below the NAVPS. This is termed as closed-end fund discount. Closed-end funds generally have lower costs compared to open-end mutual funds. No front-load or deferred sales charges are payable by investors. However, investors will be required to pay brokerage commission at the time of purchase as well as at the time of sale of their shares. Fund managers of closed-end funds are not subject to unanticipated redemptions and are usually fully invested. Closed-end funds may be distributed only by investment dealers. Registration as a mutual fund dealing representative does not authorize dealing in closed-end funds. Let us summarize. What are closed-end funds? They are funds that issue a set number of shares. Subsequent buy and sell transactions are on the stock market. They are not mutual funds. Closed-end fund discount. Lower MERs. No front load or deferred sales charges, no unanticipated redemptions, and may be distributed only by investment dealers. Let us now discuss open-end mutual funds. What are open-end mutual funds? Open-end mutual funds are funds that are open to accepting new investors by issuing new units or shares. They are also open to cancelling the units or shares of existing investors who want to redeem their investments with the fund. Investors buy and sell their shares at the net asset value per share or NAVPS of the day the order was placed before 4 p.m. Eastern Standard Time in Canada. There is no discount or premium below or above the NAVPS. Liquidity is guaranteed and the investor is sure to receive the redemption proceeds on the settlement day. The number of shares of open-end funds constantly changes due to new investments from existing and new shareholders and redemptions from existing shareholders. Open-end funds may be of no load type, or they may be offered with a front load payable at the time of purchase or back load payable at the time of redemption. The back load, also known as deferred sales charge, is dependent on the duration of time that the funds were invested in the mutual fund by the investor. Open-end mutual funds are not listed or traded on the stock exchange. There is therefore no secondary market for open-end mutual funds. As unit holders can only sell to the fund, unit holders do not incur any transaction costs. Open-end mutual funds may be formed as a corporation or as a trust. Open-end mutual funds generally have higher costs compared to closed-end funds. However, they do not have any issue-related expenses. Fund managers run the risk of getting unanticipated large redemptions, especially at market downturns. These funds are not fully invested as cash is needed to honor redemption orders. Open-end mutual funds may be distributed by mutual fund dealing representatives. Let us summarize. What are open-end mutual funds? They are open to accepting new investments and honoring redemption instructions. Buy and sell guaranteed at NAV/PS. Liquidity guaranteed on redemption. Open entry and exit changes. The number of unit changes constantly. They may be issued as no-load funds or with back loads. They are not listed or traded on any stock exchange. There are no transaction costs, and open-end funds may be formed as a corporation or as a trust. MER is high compared to closed-end funds. Never fully invested to meet redemption commitments. May be distributed by mutual fund dealing representatives.